Morgan Stanley last week and JP Morgan today. More and more global brokerage houses are getting bullish, optimistic on the Indian Ferrous space, or more specifically speaking, Indian steel and iron ore companies. Morgan Stanley, or rather JP Morgan, in fact, does say that there is more scope for price hikes for steel companies like a Tata Steel, JSW Steel, Steel Authority of India, in fact even iron ore miner NMDC. They believe that it's a combination of three positives. Firstly, that there will be regional steel price hikes in China. Secondly, Indian demand is continuously on the recovery path. Yes, perhaps last week there was a bit of a blip in prices, maybe having to do with the torrential downpour all over the country. But nevertheless, again, this week, prices were back on their winning ways. And thirdly, the fact that there is limited steel and iron ore supply in the domestic market. All of this essentially has created a very strong earnings environment for the companies that I mentioned earlier. That's Tata Steel, Steel Authority of India, JSW Steel, and even NMDC. Even NMDC, in fact, they believe will hike prices further. But for steel companies, remember that HRC prices have already been hiked by around 2,500 rupees by mill-level HRC companies and mill-level makers. But they believe that there is easily scope for another 3,000 rupee price hike. So that, coupled with the fact that, in India, iron ore prices are still a little on the down low. Yes, like JP Morgan has said, there will be perhaps room for iron ore prices as well to improve. But for now, they're still on the down low, especially if you compare it with Chinese iron ore prices. Does prove to be quite a positive for the earnings for steel companies, because it gives it so much room, to expand on the margin profile on the EBITDA front as well. So they believe that stay invested on a supportive earnings environment. Chinese demand, of course, has been impacted by rains, but they do expect demand to spike in the fourth quarter, and this further creates upside, room for steel prices. Indian steel demand as well continues to recover. So July was down 30% year on year, but they do expect a pickup month on month and see a sharper pickup on construction, especially post the monsoon season. Furthermore, like I mentioned, the current landed steel prices range between 44,000 to 46,000 versus domestic prices of 39,500. So imagine the room really that's available for Indian steel makers to hike prices, still quite far away from import prices, and that's the reason why JP Morgan believes that there's room for at least another 3,000 rupee price hike. A lot of steel companies and stocks have already seen a bit of a rally. The most remarkable rally, of course, is Jindal Steel because of other developments at the company level. But nevertheless, Tata Steel, etc. have all rallied, and in fact, JP Morgan has some very ambitious targets. They believe 580 rupees could be a target for Tata Steel and 320 rupees for JSW Steel.